Welcome to The Trade. Let's get into the technicals with Tony Sycamore from IG, who joins me now. Always good to see you, Tony.
Thanks, Jules.
All right, let's have a look at the Nasdaq. So down 1.3%. So I was mentioning these concerns about bonds and oil prices really weighing on these tech names.
That's right, but it also came with the Nasdaq sitting up against a very important resistance zone. If you see the chart before you, you can see there is trend channel resistance sitting around 30,200. It had tried the previous two sessions to get above there. You could see there was two red candles, some selling up there, some profit taking. Not a surprise, we have rallied over 10% from that late July low. But what it did do was to see another round of profit taking overnight, and this time it was more dramatic. And I think for now the Nasdaq has missed its chance to break higher. I'd expect to see a pullback towards 28,800-ish. And if it can hold there, then I think it could probably have another go higher once we start to look at Nvidia earnings and things like that. But if we were to break below 28,800 support, then the bottom of that trend channel is quite a decent way away. So we need to be very mindful. It has had a good run. There has been some profit taking. The macro data's turned a little bit against further gains here, and we need to see what plays out in the next 48 hours.
What about our market? I mean, lower again today, but we're still holding above 9,000 points.
Yeah, look, I mean, we had a cracking start to earnings season, and I don't think it was a surprise that some of those earnings were going to taper off. And certainly they have done that. We saw some stability come back into the market yesterday. BHP and, of course, a trio of very good earnings from the healthcare sector. But look, it has to hold support around 9,900. Now, of course, that was the top of the range that the ASX 200 traded for almost 4 months. It is now support. As long as it holds, it can edge a little bit into the top of that support band, but it can't break below 8,900. So as long as it holds that support area, I think there's a good chance we can regroup and push back up towards that 96 high we saw on the 4th of August.
All right, let's talk about the Aussie dollar, because it slipped a little, but still under, or just under 71 cents. A lot of people are telling me maybe 72.5 is a good resistance point.
Jules, I like the fact that it's above 71 cents, obviously as an Australian, but the rally from that 68, 63 low there has been incredibly uninspiring in many, many ways. It's just been a grind higher. So it's not exactly setting the world on fire, and I think we need to see what comes out of the FOMC meeting minutes tomorrow, and of course the labour force data. But against that, we've got some of these metal prices. Copper's tried 3 times now to break higher. It got smashed last night. Iron ore's still struggling. Gold off last night. There needs to be a pretty strong employment report tomorrow to see Aussie, I think, get that next lift higher. Because for me, I'm just not entirely convinced by what I'm seeing there at this point of time.
Are you convinced with what you're seeing in the oil market? So a third day of gains here.
I'm convinced that not much is changing. I mean, despite all the sabre rattling and the rhetoric growing increasingly hawkish, we know that oil is leaking out of the Strait through workarounds, etc., ship-to-ship transfers. And I think right here, right now, it's probably about right. You know, we don't think it's hard for it to push higher with oil still leaking higher. But by the same token, we know that we're entering a new stage here of the MOU has now expired. What comes next? Well, I feel like we could be talking about this still, Jules, at the end of this year. So right now, I think prices stay elevated, but without that upside push towards 120, which a lot of people are talking about.
Yeah, I remember talking to somebody in around May saying that we definitely wouldn't be talking about the Strait of Hormuz being closed still in July, and yet here we are nearly at the end of August. Yeah. All right, gold though, so futures down, but overall we've been seeing a nice rally here.
That's been exactly right. It has appeared to put in a bottom at 39.42. It's pushed up to the logical resistance area, the trend line coming from that record high we saw earlier this year at 5,600, but some profit taking overnight because of the bond yields, the inflationary concerns of elevated oil prices. A few of those things have prompted some profit taking. Now, I think it's pretty clear what has to happen from here. You have to see it get above that trend line resistance, which is now around 44.30-ish, and then you've got to see it get above the 200-day moving average, which has been below now for 3 or 4 months, and that's coming in around 45.07. And if you can see that happen, then you've got the confirmation that gold has bottomed and we can rally back up towards that 5,000 area. But right here, right now, for me, the easy money for this rally has gone, and it's really, really important to see what comes, more probably focused on the Middle East, oil, inflationary expectations, as to whether gold can take that next leg higher.
And can Bitcoin take another leg higher?
Oh gosh, I hope so. I mean, it just seems to be sitting very comfortably in a range between 62,500 and 65,500. There is a few potential market movers coming out this week in terms of regulatory talks, etc., in the US. But look, the boundaries are clear there for me as well. It has to get above that downtrend resistance from the 97,000 high, and it's got to get above the 200-day moving average. Very similar setup to gold in many ways, to alleviate downside concerns and to really suggest that we have put in place a medium-term bottom and potentially that the crypto winter is complete.
Let's see. Tony, always good to chat. Thank you so much. Tony Sycamore from IG. That does it for this edition of The Trade.